So with that in mind, SMT there, everything else built up. You got the inefficiency being traded into the open high right at 930, tagging into it, and then it drops down. And you're looking for that sell liquidity objective to be formed or filled after 1030, right? Because we know that the standard kind of open, high, low, close, this is going to be 930 to 10. This is going to be 1030 to 11, et cetera, et cetera. Going to the 5-minute chart, runs up there quite nicely, tags above it slightly, closes above, but there's inefficiency there with the breaker, so it's fine. Then it drops down. It just kind of wicks it here. I don't look at that as a true CISD because there's no closure below it. You know, this is not technically an intermediate term low of sorts. This is a little bit better. The fact that we're even taking out that low, you can see that as a market structure shift, right? Then if you go back to, like I was saying, the 1-minute chart and get the colors back. 15-minute gap, mark that out. Then you have your first presentation pair value being formed at 935. That's not really a gap though, because we're leaving a balanced price range right next to it, right? Up and then down inside the gap. So that's a breakaway there. Let me mark out 930. Then you have this inefficiency there. It's a little bit better. It's leaving the 15-minute gap. So you could, I guess that would work a little bit better than the balanced price range up here. You've got this, there's your first presentation gap. And then what time does it tag it? Right there at 950. Comes up, runs into the first presentation gap. That would be a shorting opportunity right at 950. Macro, right? Random time on a random news driver. Then drops down. You have a SISD there. Obviously, you could probably go into a 15-second chart and take this little wick up. As soon as it wicks back up into that SISD, that could be an entry in there. Because what's going to be in here on a lower time frame? An efficiency, right? So a 15-second chart. And pull that up. Does it want to wick up back into here? You have IFEGs, etc. You could use that sell stop entry that I've used before on the market streams. Like I said, I was not trading today or looking to take any shorts. Really, just I wasn't even looking at it. Then we continuously drop down. Eventually, we ran out the sell side right about here at 10:15. I can pull it up for you, but right at 10:15, right there, runs it out. All right, is that the right time for us to form the low of the day? Although we ran out the sell side, if this is a standard open high low close with everything in mind, high being formed of the session between 9:30 to 10, well then you've got to have the other end of the range formed after 10:30. So now this becomes the new drawn liquidity until after 10:30 is ran out. All right, so eventually we have a retracement there, stalls out a little bit, comes back up into this inefficiency, and then it comes back down, and you have a run on stops here. What time is this? 10:50 macro. Eventually it comes down and sweeps that, and then it also would be probably, you've got your this range here between your opening range high, opening range low, wick to wick. That puts you at your opening range projection. Whoops, yeah, -1 down here. This becomes a added confluence for a target if you wanted to use one. Opening range -1 standard deviation. And then eventually, I think we do probably run down and tag that. Or we're about to. Yep, we're about to. So that becomes the new drawn liquidity for the rest of lunch, most likely. Going to run down and tag that. And then whatever PM session does is whatever PM session does, right? But there's your kind of weekly, not weekly, but daily review. After the fact, kind of what I'm looking for. You can see this is the same exact stuff you're always looking for. It's just slightly harder on a day like today, right? The macro being into a reclaimed inefficiency that's already a little bit more difficult visually to trust, right? The fact that we're digging up into it again, then a 950 we tag it, would be a little bit harder to trust. I think as soon as we close through this up closing, this becomes now a bearish order block. A little bit easier to see as a move down, right? And then it kind of just displaces through. There's no inefficiency retrade during the macro. I mean, you could maybe get in, like I said, on a 15-second chart somewhere around here. But for the newer student, that's not going to be a valid opportunity. So you look at this day as either you can get in here at the 950. Someone who's a little more seasoned would be a little better at probably getting the run on stops here at 930. Or like I said, the potential retrade down here as it's confirming this is a bearish order block. But if you're newer and your criteria is I'm either going to trade a 2022 entry or a unicorn setup, then you're looking specifically for the criteria of the 5-minute inputting that it wants to be going lower. and then a 1 minute entry using the 2023 or the unicorn. So the really only valid 1 minute entry in this case that someone would be looking for if they were using those kind of entries would be this 950 entry. And if to you this doesn't make sense, not that it's not algorithmic and it still makes logical sense in the grand scheme of things, but I'm saying if you think that while you were watching this live, and then it runs up here, and then at 950 it tags up into this, because remember, this is a fully green candle at one point. Fully green as soon as it's tagging to this. That's why you can't pattern trade the 1 minute. But if you're like, yeah, that wouldn't have made a whole lot of sense to me, and I wouldn't have gotten an entry after that, then you journal that. You write down, okay, there's something like this is going to happen. What's your reaction out of it? Is this something that you deem as a missed trade, or is this something you deem as something that's outside of your model, right? Because just because you trade the 950 macro doesn't mean you're going to get setups in that macro every single day, nor will you take every single setup within that macro. So even if you can find the bias, even if you can argue it's a high probability day, if the entry isn't high quality, how are you going to get in, right? And you don't want to just be FOMOing into something because it looks like it's moving. Just because it looks like it's going somewhere doesn't give you a valid opportunity to then get in. Unless you're, like I said, seasoned and you know kind of what you're looking for as a result to find continuation trades, to find expansion trades off of order blocks, like I said. That's a little bit more difficult. But if you're 6 months in, if you're a year in, that's not going to be something that's practical, because what's going to happen is you're going to misassociate skill with luck, right? There's going to be times where you get in after this is being traded to. This is your model. But then as it's leaving, you get in using quote unquote, there's some facade that you're using as an illusion that you're just saying, oh, I'm using this model, right? I'm using this model. And then it wins. And then you misassociate that luck of you just getting in, which is actually just FOMO. What happens? It produces a win. That's a really good coping mechanism. Oh, I broke my rules, but at least I made $3,000. No one's going to, that's very good, like, coping mechanism to kind of bury that. What are you actually doing? So don't misassociate this in the beginning. You can easily get in and break your rules using whatever model, right? You can get on any single PD array, but when it wins, it negatively reinforces that bad habit. And you'll misassociate the FOMO with actually, oh, there's this model that I used. Then what happens next time is, if you do that model, quote unquote, which is just FOMO again, and you lose, that's going to be a bad loss, right? You're trading outside of your model. It's going to produce a bad loss. Psychologically, what is that going to do to you? You're going to then feel the need to either get back something because you knew you weren't supposed to be doing that in the first place, or you're going to feel threatened because it's threatening your intelligence or threatening your strength. As soon as you take a loss, that's kind of what your body is feeling. It enters into a limbic state, using the limbic, parts of your brain, the hypothalamus, the amygdala. Those things will create a fight or flight response. And your instant reaction to try and reduce that pain in your brain is to click these buttons up here. All right, very easy to click these buttons. So what I want you to realize is perfect hindsight is very beneficial. So if you can see this after the day is finished and you're like, okay, would I have been able to see this as an actual good opportunity to get in? If your answer is no, then this is not a missed trade. It's just some of the days that you look to avoid. So then what are the things that prior to this that would point to you to looking to avoid it, right? I probably could have traded this day on stream. I may have not taken this entry, but maybe this entry down here, if I had to guess, using perfect hindsight. But is it something that I want to risk my mental capital on all the time? No. Especially when there's other opportunities later on in the week. I have no rush on a Monday to try and get in. Tomorrow we have orange folder 10 a.m. Then we have red folder sometime between Wednesday and Friday. So coming into a Monday and thinking you need something, not a good look. You just come in. If there's nothing there, there's nothing there, right? Don't let FOMO overtake you. Don't let the fact that it's moving overtake you. Some people are going to wake up in the morning and maybe you try the sleep in technique, right? You sleep in for 30 minutes or an hour more, and then you're no longer in that rhythm that you normally are. But the problem is that if you wake up and look at your phone, you see it moving, you may freak out, but it's always going to be moving, right? You need to have these injecting logic statements that help you calm down and think logical. So price is always going to be moving. I don't care if it's London. I don't care if it's New York. I don't care what it is. Price is always moving. It's not always a reason to get in, right? Price is not moving without you, right? Tomorrow, there's going to be the same exact move. It's going to move, right? We know tomorrow at Tuesday, it's probably going to move around 100 to 400 points sometime during the morning session. up, down, sideways. It's always going to be moving. It's not always a reason to get in, right? The best thing I can do is control what I can control, which is my own reactions, my own output. And you have to understand that, your mental capital is a constantly draining function. It's always negative. It's a linear function that's negative. It's not always linear. Obviously, when you take a trade, it's going to dip faster. But you need to understand that in order to trade properly, it's not just you go to zero and then you're like, oh, I can't trade anymore. There's actually a limit. There's a lower limit they need to be worried about. When you take a loss, when something happens that isn't normal, you need to have enough, right? If anyone understands willpower as a human, you know that there's a limited amount of willpower you have within a given time, right? And there's studies that have been done on this. People will do puzzles and then have another task that they have to do that requires a lot of willpower. And the people who have done the puzzles beforehand are not really willing to complete the second program because they have a finite amount of willpower. So look at willpower as your mental capital. You need a certain amount of willpower or mental capital in order to operate in those stressful environments, right? You need to be able to operate when you take a loss, when something goes wrong, enough willpower to then fight the urge of over leveraging and over trading and actively do what you need to be doing, right? So you take a loss, instantly there's this pain aspect that's associated with it. And your brain wants to get out of that pain. So it needs a coping mechanism. If it needs a coping mechanism, then you need to replace that, that feeling of over trading and over leveraging with something else. And we'll get into that probably later. But you need enough mental capital, maybe 20, let's call this 20 units of mental capital, right? If you don't have 20 units, how the heck do you expect to have enough willpower and mental capital to, as soon as you're faced with pain and that amygdala is shooting off, you're going to be able to think clearly. So it's not, you need to have zero, when you take a loss. It's you need to always keep and maintain. As soon as you get into that loss and when everything goes wrong, obviously you're going to be following the process, but what happens when stuff goes wrong? Are you still going to be able to follow the process? So you need to keep 20 units or whatever amount of units of mental capital available by the end of the trade, whether you win or you lose, because whether you win, you need to manage that excitement. If you don't manage that excitement, then you're going to have a huge spike in dopamine. And what happens? You're going to dip down. And what is that? Addiction. You're going to have an addiction to winning. And then when you're losing, you have to manage that pain, which needs a coping mechanism, i.e. going to the gym, i.e. leaving the charts and doing something else that gets your mind off of that limbic state, right? So when there's a day like this and you're already maybe down on mental capital, maybe you only start with 40 units, taking anything more than a scalp or taking a loss outside your model is instantly going to deplete that amount that you have really quickly. And you need to be aware of that. All right. Now, I don't think this day is impossible to trade. I'm just saying for those who are new and are struggling to find a model or struggling to look at the charts and they think that every single opportunity is an opportunity and that every single opportunity that they don't look at the charts is a missed opportunity, that's the kind of problems you're going to run into. All right. And I want to steer you away from that if possible. Okay. The market's always going to be moving. And when you advance, you're going to be able to trade every single session, every single macro if you ever wanted to. But then you're going to realize that you don't want to because it's work. Why would you do more work than you need to? Even if it makes you money. You're not in this really to make money in the sense of, obviously you are, but at least I'm in this to have freedom. I think anything more than the fact that you have a house, you have food, you have water, you don't have to worry about money. Anything past that is vanity, at least to me. Obviously the nice watches, the nice whatevers are nice, but at a certain point, what does it do for you? Okay. So if you're in this for freedom, I think that's a better look than being in it for money, because then you're no longer addicted to that money aspect. You're no longer outcome oriented. You're no longer trying to trade for money. You're trying to trade for freedom. And that makes you more aware of the fact that you need to be doing what you need to be doing when you have that freedom. Because if your life looks exactly the way it's supposed to look like before you reach that financial freedom, it's going to be even more easier to segue into that life. You're going to just kind of create an identity, step into that identity, and then everything's going to flow to you. That's the law of attraction, right? I could go on Psych for years and years, and I'll probably have another second part to that first Psych video if you enjoyed that one. I've got like a I was writing down some notes yesterday. I've got about 16 bullet points that we'll go over in the next Psych video of kind of how to, not really how to fix and solve problems, but more of how to think as a profitable trader and what you need to do in order to succeed with that. But yeah, Slander just linked the video there. If you want to check out that video, it's about 45 minutes. You could probably put it on 1.25 speed if I don't talk as fast for you. But I highly, highly suggest, if you've not watched that video, to watch it from front to back. I know attention span in 2025 is cooked, but I'm telling you, if you can sit through a 45-minute video, you are better than 90% of everyone else probably in the world right now. People watch 6-second videos and then skip to the next one. It's a whole epidemic that we've got. So as much as you can reduce your consumption, and I'm not saying just watch my videos because for whatever reason, I genuinely think that if it's my videos, it's someone else's videos, the good videos are not going to be 6 seconds long. What the heck am I going to learn in 6 seconds that is going to be a game changer? It's a lie. The valuable information is the one that you spend time on. So yeah, if you've not watched that video, and especially if you're struggling on psychology, you need a method to finding and fixing and understanding your psychological problems. That video is quality. I think it's probably one of the better psychology videos that I've put out in the past year or so. But like I said, I'll probably put the second part out sometime this week. We'll just have a sit down psychological raw talk sort of thing. Bring a paper and pen, take notes, and then obviously I'll probably record that in video and then upload it later on. But if you're just now joining, this is just our standard Q&A/backtesting stream. So if you got any questions, model related, psychology related, or technically related, we can get those answered in here. We can head out. Karashi said that's what I was discussing with a friend of mine, to sit and study and practice trading. 90% of people don't have such work and study ethics. I agree 100%. I think passion is a very good motivator, right? It's very easy to be driven. It's very easy to have a work ethic if you're passionate about something. So if you really don't like trading, it's not going to be very easy to do that work. But if you're in love with being better, if you're in love with creating the life that you want to have, that creation aspect of you is going to force you not to consume as much, right? Flux, can you talk about what I asked you the other day about managing multiple prop firm accounts and how you would trade them, and also how you trade live accounts differently from prop accounts? I got you. So I would say, if you've got multiple different prop firms, that's going to be already slightly difficult. I've done it before, but you've got to have probably multiple monitors to do that, because then you have to have your fills are going to be slightly different because you can't pair them all together unless you're using one of those third party trade copiers. I'd rather just click them all on my screen because I can manually do it. If you have Top Step or Tradeify or something, and you have like 6 accounts with them, right? I would suggest trading them all the same. I don't think there's a reason to be trading high leverage or like aggressive and a consistent one. I've tried it before. To be completely honest, whenever I would do that, it would just blow the really aggressive account, and it just wouldn't make sense, because you're trading 2 different styles with the same brain, and you're burning more mental capital than you probably have. So if you are using multiple prop firms, if you're using multiple accounts, just link them together, trade it the exact same way, right? Don't become 2 different persons to try and trade the same price action. If one model and approach works, you just do that, and you abuse that and exploit that until it's patched, and it's not going to be patched. You know what I'm saying? So I would suggest just trading them all the similar. Don't have an aggressive play style and then a non-aggressive play style, or trade one on non-news days and trade the other on other news days. Yep, exact same thing for combines. For combines, you can get a little bit more aggressive, obviously, if you've got the capital to do so. You can kind of risk a little bit more on combines compared to fundeds, or evals. You mean, like, evals for the most part they're easy to pass. Anyone can really pass them without even understanding of how to freaking trade. So, but yeah, with funded accounts, you want to treat those very, very properly with risk management. And obviously, if you are gambling the combine away, it's going to be harder for you to not gamble the XFA away, because you just created that habit in your brain. Live accounts, much easier to trade, because Obviously, you're going to have to be using lower risk, but you can hold trades probably for days if you have the margin to do so. There's no such thing as a profit limit. You're there to just make money, right? So you can have runners from 9 a.m. to 1500. It's much easier to trade a live account. And then obviously your withdrawal kind of thing. This is not financial advice, of course, but your withdrawals and the way that you treat the account is up to you. But I think live accounts are the way to go because you have no crazy restrictions and rules on your account that a prop firm normally has. So you can hold trades longer, which is the best thing. You don't have to worry about, oh, I'm making too much money, so let me close my trade out here. That just makes zero sense, right? In a logical statement, what the heck does that even mean? What the heck does that mean, Kobe Bryant? So I would say is for the strategy for most people, it's going to be get a bunch of money out of those funded accounts, milk them dry, and then transfer that profit over to a live account and trade the live account. Obviously, you could probably milk the live accounts and your funded accounts at the same time. That's what I think is the best. Yeah, and ICT has said it plenty of times. And if you really just look at it, it's just a really good business program, right? If 90% of people are unprofitable, they just have an infinite money glitch in the sense of making a prop firm. So your job is to do as much damage to them. You know, they're not your friend, really. Do as much damage as you can to them and then leave and never look back. So like for me, as soon as some of those prop firms start taking more than they should, I leave. You know, I was working with Tradeify not Tradeify, Trade Day back in 24. I was promoting some of their stuff. I don't really promote it as much. I have an affiliate account with them, but I don't promote them. I literally just passed their eval, got in the funded, took out a certain amount from the funded, and then the split went to like 80-20 or like 70-30. Maybe it was 80-20, but I just dipped after that. Took my money out and left. I was like, I'm not 20% is a lot, right? Like if you make $1,000, you're taking 200 of it, you gotta be crazy. So, you know, they're not your friend. They're not there to treat you right. They're there to make money off of you. So my suggestion is just to make as much money as you can from them, switch prop firms as much as you want. Exactly. Yeah. And then you got to pay taxes. So, but live account is the way to go because then you can scale that super, super quickly. In the beginning, you got to use low risk, but you know, if you have an actual $100,000 account, I mean $100,000 in risk available, and you're risking 2%, you know, you can hold a 6R. You're gonna destroy that account, especially if you hold runners. So, but obviously, the way I look at it is probably different from the way that some other people look at it. So I highly suggest just kind of writing down the numbers, figuring out a game plan in your brain. You know, spending time, maybe 30 minutes, just looking at the different prop firms, looking at the different splits, looking at what you really can do to just look at this like a business. Just look at your trading career as business. How can you maximize profits, minimize the amount of expenses, and scale aggressively, right? Don't try and do it too quick. I think the more that you have a time limit, the more that trading is difficult. If you have like, oh, I got to do it by May, or oh, I got to have it by June, it just adds a certain amount of stress to yourself. And then what do you do with that stress? And what do you do with this time limit? You become outcome oriented. You look at the results and think, okay, this is where I want to be. These are the results now. And you're comparing apples to oranges because it's, you know, you don't understand how exponentially quick trading can go. You can be, I think exponentially, there's an exponential linear learning curve for trading. So you may be putting a time limit of, I've got 3 months. But then you're over here and you're comparing up here, and that distance is going to create this fear. All right. It's better if you just don't have a time limit. You accept, okay, as long as I've got food to eat, water to drink, and a house over my head, even if you don't have those things, I know damn well I'm going to be able to get those things. Even if I'm homeless, you know, if you have the mentality that nothing's going to stop you and the worst thing you can do is die. And if you know where you're going after you die, like what the heck are you losing, right? So don't have a time limit ever in trading. Don't have a time limit of when you're going to pass a funded. Don't have a time limit of when you're going to get out of evals. Don't have a time limit of when you're going to get out of demo. Don't have time limits. It just ruins you and makes it way harder than it needs to be. I know it's hard to not have a time limit, but I'm telling you, you don't understand how exponentially quick you're going to grow when you just remove that outcome process. Having a time limit is the direct consequence of outcome thinking. You think that there's an outcome. There is no outcome. It's you become someone. You become a trader. You're changing your whole identity to become a trader. How are you going to put a time limit on that? Like, you know what I'm saying? It's like, I'm going to become a new person by tomorrow. You just do the things you need to be doing. You say the things you need to be saying that reaffirms your identity, and you become a trader. There's no end goal, right? There is no end goal, because think about it. Once you become that person, you're going to have to keep doing that thing. You're going to have to continuously show up. You're going to have to continuously manage risk. You're going to have to continuously get yourself out of drawdown. That's your job as a trader. So your job and your identity are kind of hand in hand in this game, which is unfortunate. But there is no end result. You have to just constantly wake up. Am I doing the thing I need to be doing? And am I happy with my progress today of just kind of being the trader I am supposed to be? That's it. That's your daily kind of outlook. And if you check all those things off, yes, doesn't matter if you lost $1,000. Doesn't matter if you in demo. Doesn't matter if you made $1,000. As long as you're doing what you need to be doing, those individual outcomes are like minuscule. They really mean nothing, because what's the point after that? You're just kind of becoming someone who attracts that kind of lifestyle. And once you become that, then it's very easy to it flows to you. There's no resistance. All right. If you're trying to be, a professional athlete, but then you eat chips all day, what do you expect? If you're trying to this is a professional mental athlete. You're becoming a mental athlete. So your whole day is going to be basically based around training your brain and keeping your brain in a good mental state instead of a good physical state, so you can perform properly. I mean, physical also does help, so don't get me wrong there. Yeah, your brain does become your enemy. In this, I mean, in most of life, your brain is your enemy, right? Like your mind, you're always at war with your mind. That's the exhausting part about trading, to be completely honest. You're always battling your thoughts up until you kind of realize you got to live with them. So stop trying to fight everything. Just kind of submit, But yeah, like I said, I'll probably have that in-depth psychology guide part 2 coming out probably this week. I can on my calendar. Let me take a look. Yeah, we've got 8:30 news on Thursday, looking good. So my expectation would be Thursday, Friday, Tuesday, Wednesday, Monday, probably for the week. So I'll write that out if you want it. Thursday, Friday, Tuesday/Wednesday, and then Monday being lowest probability. That's my expectation for the week. Tuesday, Wednesday could be either one of those could be decent. Either one of those could be slightly bad. So you're gonna kind of take it as a medium probability, day by day sort of thing. Thursday, Friday, I'm looking to smash it out of the park. If it offers it to me, if it doesn't, then we look for one of the other days, or we just don't look to trade at all. Not a huge deal. But yeah, if you got any more questions, you can put them up in the chat. Otherwise, I won't hold you for too much longer. You can get on with your day. I know the Easter sale. I may actually just extend the Easter sale for this week, because I know some people were asking about it. But that just wrapped up. But if you're interested in that, I may extend it maybe to like Friday or something, just as an extra opportunity for those who were busy this weekend. But if you're in the PDF gang as well, that post I put in the PDF chat, very, very good read. It may take you a couple minutes to read the entire thing and understand it, but if this week you can go in and study that post from yesterday, and how it relates to the week and the individual session scalps, it's a very, very good read there. Yeah, this will be the last sale for a while, probably until midsummer or something, July 4th. I don't really know. So if you want to pick up the PDF, you want to pick up one-on-one calls, etc. I'm kind of booked out for one-on-one calls, to be completely honest, for this week. So it may just be, I don't know. I'll let you guys know. How much would you risk per trade with a 50K funded? So with any of those funded accounts or evals, I take the max risk and split it up. Obviously, this is going to be personal preference and not financial advice. hypothetical, of course. So if you have a 50K account, you take the max drawdown and you split it up into 10 to 20, I would say, for any new trader. That's good. So say you have 1,000 risk, right, as your max drawdown. Okay, then each of my trade risk is going to be max $100. And then if you lose, you cut risk in half for the next trade. If you lose that trade, you can cut it in half again, or you continuously use that risk until you recoup the losses, the original loss. Right? If you want to, you can watch ICT's video on money management and risk management. Those are really good videos. But this is typically how I approach it. You take that max drawdown. I'm not looking, and people ask, how many contracts do you risk? Contracts are relative to your risk and relative to the stop loss, right? You have total risk, then you have stop loss size equals contracts available. I have a Python. If anyone has Python downloaded onto their computer, if you don't, you can just go onto your web browser and look up Python, the latest release, and download that. I have a Python script that I use personally every single time I'm booting up the stream and I'm booting up my live, my prop firms or my live accounts on my other screen. I'll have this right below it. And it's basically just a risk management calculator that I'll punch in a bunch of numbers, and then it'll tell me exactly how many contracts I need to use. So this is a free download. You don't got to do anything but download Python. I promise it's not a scam link. And it just automatically calculates that, so you don't have to manually calculate it. But contracts don't have a contract amount, because if volatility, like we saw last week or 2 weeks ago, was super high and you're using the same amount of contracts, you're going to get destroyed. So what you do is you take, okay, if my total risk is $100 and my stop loss is 2 points away, or say it's 20 points away and my risk is $100. Can I use one mini? No. Right? And then you go down. You kind of figure out, okay, how many contracts can I use? You maybe have to go to the micros or minis. And then if you take if you're average, I don't think you should directly trade RR. That's my personal idea. But if you do trade RR, then obviously you just take that and then you try to, every time you lose, you cut it in half. You cut it in half again, maybe. So you have basically it goes 100, and then you have 50, and then you have 25, So every single time you take a loss, you go to here. If you go to win, you go back up here. If you take another loss, and you go over here. And then until you recoup that original loss, you go back to here. So you basically have to have 2 R trades in order to go back, and you have a -1 R trade to go back down. Right? And that way you're constantly taking good trades and you'll never blow up. And one of the major things you have to understand, to be a good trader, you need to have 2 things, at least in my mind, at least. One is self-belief. You need to have self-belief about you as a trader. You need to talk about yourself like you're a profitable trader. You need to do the things you need to do in order to reaffirm that identity. And then 2, know you won't ever blow up with proper risk management. Right? If you know that you'll never blow up because you're managing your risk properly, you're not going to worry about rules. You're not going to worry about how long it takes, because the one thing that you hate the most is blowing up. The one thing you hate the most is not blowing up, but it's also breaking your rules. Okay, so if you know that you'll never break your rules, or if you do break your rules occasionally, very, very occasionally, that you won't blow up because you have proper risk management, a lot of the fear goes away. Okay, I'll never blow up. It'll never hurt me as much as it can. I'm limiting my exposure to that uncontrollable outcome. Very easy to accelerate as a trader. And obviously you pair that with your self-belief of who you are technically and psychologically, then you're solid. But this is how I approach risk. And obviously, depending on whatever size this is, you can scale up, scale down. And as you get better and better, I really think the minimum amount or the maximum amount of max drawdown is maybe 10. So some people who are aggressive will cut that into 5 and then go to 10 when they lose. Now, when you look at probabilities and variability, if you have an 80% win rate, ask ChatGPT, if you have an 80% win rate, what's the chance of me taking 4 losses in a row? And you'll get an outcome, and that's the probability. And it may be if it's 2%, you can kind of get away with this. If, this number here increases. If it's like, okay, you have a 60% win rate, what's the chance of you taking 3 losses in a row? It's pretty high, right? It's like, what's the chance of you flipping tails 3 times in a row? It's not impossible, but the statistical probability of that happening is important, right? It's more than 5%. So it's statistically significant if it's more than a 5% P, right? If you took stats, you know what I'm talking about. So you got to be mindful of that, and obviously do your math on your model and that win rate is all hypothetical. No one's going to actually have an 80% win rate, because you have the amount of times that you're actually going to be able to do that is when you're functioning at your best. And when you're functioning at your best, you may be at a 90% win rate. This is like a speculative number, just like how RR is a speculative number. No one's actually trading a 2R. If you are, I think you're limiting yourself, especially if you understand your model, right? If the drawn liquidity is 60 points away and your stop loss is only 10 points, why would you not go for the 6R? Especially if it makes logical sense as to why it should go down there. Why would I be limiting my trade just because, oh, it hits 2R? To me, 2R is you're trading the money. You're trading money here. You're trading the outcome. You're not trading the charts. I want to be trading the charts. So that's my personal take on it. And obviously people are completely available to disagree, but that's my take on RR, win rate, mismanagement, things like that. I think the more that you can let your trades run and don't think about, oh, what if I make too much money as a prop firm? If you have like a consistency rate of 20%, right, and your goal is 9K, don't try and just look at, okay, 1,800 is now the max amount of money I can make per trade, because otherwise I'll go over that 20% limit. Why don't you just, think bigger? Like if you think, okay, well, if my average trade is now 4,500, don't cut it short. Just make this your 20% now. And now maybe your target now is 25K. And then now you have even more to pay out. You may go over this limit, but it's not a huge deal. You overshot it. Prop firms will love you for that. So sometimes you got to just think bigger, and don't think about the money side of it and trying to manage your money and trying to hit targets on the dot, because they're all speculative. There's no if you have an 80% win rate and a 2R, you don't think that, oh, in 5 trades, I'm going to pass the account. It's not going to always be 5 trades. There's like a standard deviation of the amount of trades it could take. It could go this way. It could go this way. It could go this way. You know what I'm talking about? It could go here. It all ends up there of you passing, and you start here. But how many trades are going to take? I don't know. So that's why you don't worry about the outcome. You just worry about the process. If I'm worried about, I can't control any of that stuff. The only thing I can control is me showing up, doing what I need to do on the day. And I know that throughout a period of time, all those things will come to pass. I'll pass my eval. I'll get my funded. I'll get payouts. But the more you think about those stuff, the more that you're outcome oriented, and it's going to be even harder to get that opportunity. I'm not saying it's impossible. I'm just saying you're making it harder for yourself if you're constantly worried about that stuff and not worried about, how can I improve my process? How can I improve my model? How can I improve my routines? How can I improve when I take a loss? What do I do? How can I improve when I take a win? What do I do? Those things should all be the same. If you have that very solidified, then it's much, much easier to trade. You don't, the less you can think about trading and that kind of stuff when you advance, the better it is. You don't want to be thinking about it. It's just work at the end of the day. Like you're just disciplined to it. You make money from it. You got to show up. You got to do certain stuff. It's work. It's maybe fun and you enjoy it, and it makes a lot more money than a standard job for sure. But at the end of the day, it's work. So you shouldn't be doing more than you need to. Don't become a workaholic in this, especially because your mental capital is everything. And the amount of work you put into it is not directly correlated to the amount of money you make. It's actually almost inversely correlated. There's kind of like at a certain point, it kind of just falls off. Like there's a certain amount. This may be X, right? And here's our Y and X axis. There's like amount of work you put in here. Sure. But then when you get to a certain point, it's kind of linear, and your extra work actually may even decline you, because now you're actually wasting your mental capital, and now your performance is going to go down the drain, right? Think about this like as a professional athlete again. There's a certain amount of training they need to be doing. There's a certain amount of working out they need to be doing. There's a certain amount of reps they need to be doing. But if you go overboard just because you think that, oh, more practice and more training and more work and more lifting makes you better, at a certain point, what happens? You can get injured. You're going to drain your body so fast it's not going to be able to recover. You're going to abuse yourself so much that when you're actually inside that game opportunity, you've now increased the chance that you're not going to perform well, either through injury, through mental turmoil, through physical pain, all those sorts of things. So same thing in trading. You're just a professional mental athlete. So the amount of work you do is not directly proportional to the success you see. It's actually, it is exponential to a certain point, and then it drops off, and then it probably declines after a certain rate, maybe like within this range here, and then it starts to decline, right? So there's a lot of stuff that you'll learn throughout just doing. I learned a lot of this just by failing, and I don't want you to fail. So as much as you can just take my advice, and even if you don't believe it in the beginning, just kind of go in and study. Is what he's saying true? Is what ICT is saying is true? And most of the times it is. I'm not going to lead you astray on purpose. I'm trying to tell you things from experience of me losing money, of me blowing accounts, of me failing, and then getting out of it and telling you, okay, this is what it is from the other side. And it's either you're going to come to the same conclusion most times. That's whether or not you want to just go through experience physically and experience it yourself, or if you want to, just take someone else's advice and their experiences and be like, okay, I'm going to avoid that. That's the best thing you really can do, I think. I just noticed this, but nice little loss manipulation leg, -2, -2.5, putting in the opening range, not the opening range, but the end of the New York session, kind of. And then it drops down -4, wicks it right there, and it comes back up into the range. Quite nice, right? And you can see the -2, -2.5, as the retracement / reversal range. So on high probability days, it's not going to retrace super far. So in this case, it's retracing, taking out the stops and clearing those here, taking them, dropping down, SysD there, inefficiency, tags up into it right before the macro time, and drops down again, re-offer macro time entry off the order block, drops down, gap there, uses that, never takes up the high, and then flushes the sell side, and then goes to -2, right? For closing through -2, -2.5, goes to here, and you can find the continuation trades through that until it tags that, and there's your new low formed. Like I said, targeting that opening range, -1, which would be from here to here. That's this target right there. And there you go, right on stream. Where did I mark it out? Did I mark it out somewhere? Maybe I deleted it. If you were here early in the stream, you know what I'm talking about. There you go. Nope, wrong one. There you go. So, I'll wrap it up here. 42 minutes. Don't got a ton of questions today, and I've been yapping. So I'll post this stream recording up later today. You'll find it in the YouTube vids section. If you got any questions that I've missed or you think about in between then, just hit me up on DMs, or you can ask my admins if you've got any questions about the PDF, about private mentorship, things like that. I'll probably extend that sale out till Friday. So if you want to pick up that stuff, just wait for that code or let me know, and I can put in the code maybe for the next month if you sign up. Yeah, as the week develops, for sure. And we'll have streams throughout the week as well. So look out for that psychology stream. It'll be sometime between now and Friday. I'll make sure to be recording it and putting it out as well, probably publicly. But that'll be a really good video, I think, for most. So until I talk to you guys next time, take care. Good luck, good trading, and I will see you guys in the next one. Peace.